Hey guys, hope you're doing well today. I just wanted to talk about a strategy that I thought of in the last week or so. So my uncle, who asked me about setting up a trust for two of his new grandkids, asked me what I would do if I were buying positions right now for 20 years out. And I thought about it a little bit, and I considered, just saying the standard response, which is buy VOO or buy the S&P via SPY, for example. But after thinking about it, I thought, what a better idea might be is to buy a select few of the mega cap names and just hang on to them over 20 years. Now, the names I have here are Google, Meta, Microsoft, and Nvidia. The cumulative market cap across those four names is over $12 trillion. They're generating almost a trillion in revenue, and their cumulative average revenue growth is 33.17%. Obviously, that's pulled up a lot by Nvidia's insane revenue growth right now. The net income, which is a profit of these four firms, is $351 billion. Now, right now, the overall weighing of these four names in the S&P is about 22.68%. Obviously, there's the equal weighted index as well. But the reason why I thought about this was that essentially each of these names is now a tech conglomerate, and they dominate in their spaces. They know how to innovate the best amongst anyone in the world, and they deploy capital more efficiently than most companies on Earth. And each company here, so beyond their core holdings, if you want to see what they actually own, we can see that, for example, NVIDIA has investments in CoreWeave, which is a public company, ARM Holdings, Applied Digital, Recursion Pharma, Nebius Group, WeRide. Meta has investments in Scale AI and Databricks. So, for example, they purchased a 49% stake in Scale AI. Now, the cool thing here, well, the interesting thing here more so, is that big tech has figured out how to circumvent DOJ antitrust. So what that is basically disables companies from gaining a monopoly in a certain sector by acquiring competitors, which is anti-competitive overall. But what's happening here now is that mega caps have realized that instead of outright buying a company or a competitor, they can purchase a 49% stake in the company, essentially giving them half the revenue access to all their IP, access to their talent, access to all their future plans, and that can kind of weave in and out of their current strategy overall. So Meta bought basically half of Scale AI, took their CEO on, took a bunch of their employees on as well. And they also own a big stake in Databricks. Maybe not a big stake, but it's a minority stake regardless. Google has investments in Freshworks, CrowdStrike, which is cybersecurity, Uber and Lyft. They just bought Wiz as well, which is another cybersecurity company. They have investments in GitLab, which is public too, Toast, Adagio, Desktop Metal, SSI, and SpaceX. So if you want exposure to SpaceX, which is right now valued at about $400 billion roughly, one of the largest private companies on Earth, Google has a decent sized stake in them right now. Then you have Microsoft, which has OpenAI investment, as well as profit sharing. Cruise, which is GM's AV arm, London Stock Exchange, Databricks, Grab, numerous VC-backed startups, fully owned subsidiaries such as Activision Blizzard, LinkedIn, GitHub, Nuance, ZeniMax. So they own a lot of different things. The point here is that basically by owning these four companies, you're basically owning your own ETF in a way. And granted, they are trading at all-time highs, a lot of them. Microsoft is at all-time highs. Google is almost at all-time highs, only about $15 away from all-time highs. Meta is at all-time highs. Nvidia is almost at all-time highs as well, only a couple dollars off. So you might be wondering, like, Nick, why am I buying these names, at their peaks? Well, the thing is that when my uncle asked me this question, I said, you want to put this money away for 20 years. I'm confident that in 20 years' time, these companies will invest their money far more efficiently than everyone else in the S&P 500. And that's a much better way to go. So, allocating a quarter of your portfolio across these four names or perhaps weighing it a little bit heavier for Google because Google is the cheapest name right now based on the PE metric, right? So you can see right here that the PE ratio of Google is about half that of Microsoft and less than half that of NVIDIA. Um, you can develop a pretty solid portfolio over time, right? And understanding that most of the S&P is already tech anyway, you're getting more exposure to the winners and no exposure to the laggards, right? So this is just a little bit of a thought process here that may be a good idea for those that have a long-term time horizon. And again, looking at the charts here to analyze the charts. So I mentioned that Google was, not too far from all-time highs. They're currently at like, 5.5% from all-time highs roughly. I expect them to pump toward 250 plus by the first quarter of next year. You have NVIDIA, which is trading at all-time highs. You have Meta, which is right at all-time highs pretty much as well. And then you have Microsoft lastly. So again, these four names are absolute behemoths, and given that they have so much pricing power, they have essentially oligopolies in their given domains. And think about Google, for example, like they have access to data via Gmail, via Maps, via Waymo. They have search as well. They have Chrome browser. They have Android, right? They have so many things going on. YouTube as well, right? Meta has WhatsApp and Instagram. So the point is that by buying these four names, you can't think of it as owning one company individually or four companies individually. You got to think of it more so as owning four conglomerates that will deploy capital much more effectively than anyone else can. That's my short observation for the day. Again, if you do think that the market is going to pull back at some point, perhaps incrementally leg into these positions, like buy incrementally, which is what I told Michael to do as well. But yeah, I think this is actually a pretty damn good strategy instead of buying the S&P, especially when you consider that 20 years down the road, these should all be substantially higher than they are now, even factoring in that they're already massive companies, right? So hope this helps. Just some food for thought. Again, not investment advice, just ideation that I'm talking out loud.